because I get the question all the time from business owners, even business owners who've been in business 15, 20, 25 years, what can I write off? And we'll talk about a couple that I see a lot of business owners that miss out on. But I think just in general, a lot of business owners could write off a lot more expenses if they just had the right framework or the right mindset.
Welcome to Show Me the Nuggets, where each week Joe chats with world-class entrepreneurs to find out the key principles, strategies, and processes that lie behind their outstanding achievements. Now, your host, the no bullshit serial entrepreneur, Joe Troyer.
Hey everybody, it's Joe Troyer, and welcome to another episode of Show Me the Nuggets. Today, we have on Brady Slack, who's the owner of High County Finance, and I met Brady at a mastermind. We had a really good conversation. I'm like, man, this is somebody I need to have on the pod to share with you guys. So he's been doing full service tax and accounting, and it's not about how much money you make, right? You've all heard the saying, it's about how much money you keep. So really excited to have Brady on today, man. Welcome to the show.
So thank you for having me on. I'm excited to be here, and hopefully we can drop some nuggets today. I think we might be able to. I mean, there's a lot to cover, but I think we might be able to.
Man, I'm excited. We talked about just like 2 or 3 things before the show that got me excited. And I know it's things that people don't really know about that'll have a huge impact on how much they get to keep. And really, I want to focus in today on how to reduce your taxable income and maximize your profits. And before we really dive deep, I gave a little intro for you, but can you help bring us up to speed on kind of how you got into the business that you're in today and how you got started?
I got tripped and pushed, if you really want to know the honest truth. I was in school. I was a double major studying accounting and personal financial planning. At the time, I was dating my now wife, and her dad owns a business. He's owned a business for a really long time, a very successful business here in Utah. Believe it or not, delivering bread, of all things, to school districts. And when I was going to school, I was working in real estate at the time, doing some transaction coordinating for a title company. And he's like, hey, my accountant is looking for some people to help him out for tax season. And it just so happened the guy was going to pay me more than I was currently making. And I thought, I should probably get a little bit of experience here since I am an accounting major. And I fell in love with it. More so taxes than debit and credit accounting, because they tied so much into what I wanted to do. And that was, I wanted to be able to leverage high net worth clients and help make them more money. But what I found is there's such a lag in the accounting industry, especially when it comes to tax planning, that yes, you can do there's so many things you can do to help clients make money. But what they really miss out on is how to keep most of that money, like you said earlier. So I worked for that firm for a number of years. And then about 3 years ago, I left that firm and I started High Country Finance. And then we've grown. We've got a staff of just over 25 employees. We've 3x'd our revenue every year that we've been in business so far. I think we'll continue to do that this year. And I love what I do. Again, I got tripped and pushed into it, but I wouldn't have traded that for anything.
Man, I love that. We need lots more people like you. I think it's every entrepreneur's duty, right, to really be responsible for their accounting and for their taxes and to take ownership of it. I know way too many entrepreneurs and myself included in the past have been very passive about it. And then it's like, it's the day taxes are due and you're getting a message from your accountant saying, hey, go send this check and it's 3 times more than you thought it was going to be, or, 3 times more, above and beyond what you've already paid in terms of estimated taxes. Absolutely love that. And that's why we have you here.
Yeah. Thank you. No, I think to kind of highlight on that, I just think taxes are so ambiguous. There's so much unknown, and I just think human nature is that when you don't understand it or when it seems difficult, I'm going to put it on the back shelf because I don't really want to have to worry about it right now. I don't want to have to go through that hard thing. And so I think my biggest goal is just to be able to provide that value for our clients, help explain it so that they understand it, because if they understand it, they're more willing to do that. And so that, yeah, like I said, I kind of got tripped and pushed into it, but there are only two certainties in life, death and taxes. And I didn't necessarily want to be in a mortuary the rest of my life. So I'm happy to be doing what I do.
That's awesome, man. And looking at the notes that our producer prepared, he said that you also do a bunch in the like you actually advise other tax professionals or account professionals, real estate investing programs, investment platforms, syndications, and talk about a lot about tax strategies. So definitely seems like you got the entrepreneurial bug as well.
Yeah, to be honest with you, I'm not your typical accountant. Like I said, I don't love the debit and credit side of accounting. I've got a fantastic partner. His name is Mike, who's our CFO, and he does outsourced CFO work for a lot of our clients as well. And from a debit and credit standpoint, he's phenomenal. But I don't necessarily love that. Outside of the accounting firm, and this is what I also believe makes me unique is I am an investor. I am an entrepreneur. I invest into real estate. We own a SaaS company that we're building. And outside of the accounting firm, there are other things that I'm doing because I understand the importance of business and the importance of building a net worth and the importance of investing and reinvesting money, not only from a tax standpoint, but just from a generational wealth opportunity. I want my boys to be able to experience hard work, and I want them to understand what their dad's doing is important. And I want to be able to be that mentor, that advisor, or that example to them and maybe my brothers. But yeah, I've worked with a lot of different real estate syndications and coaching platforms. I love real estate. I think it's great. I've spoken on a couple of different stages. I've helped advise, or I've helped coach different accounting groups on different things. So yeah, I definitely think that entrepreneurial bug is also something that sets me apart from other accountants, because a lot of the advice that people receive it's from people who've never done it. It's from people who don't own a business. They don't know the struggles of owning a business. They don't know the struggles of trying to run a payroll or make a payroll when they can't. So I think that insight provides just a little bit above and beyond what the normal accountant is able to provide, in my opinion.
Yeah, man. I know now why, we hit it off so well. Yeah. So digging in, before we talk about specific tax strategies and reducing your taxable income, I think it would be good to just talk about kind of your process or your framework, high level, the simplify, reduce, produce, and then we can start getting into particular strategies on actually how to reduce your taxable income and maximize your profits.
Yeah, so I formulated a little process that we do with all of our clients, whether it's a client whose business is making $200,000 a year or their business is making $20 million a year. And with our team, what we do when we onboard that client or while we're working with that client is we go through the process of simplify, reduce, and then produce. And really what our goal is in this process, Joe, is to be able to allow our clients to understand the processes, the way that their money moves, how they're making their money, how they're spending their money, and allow them to look a little bit deeper into the nuts and bolts of that framework so that they can highlight pain points. They can highlight areas where maybe their financial processes are not up to date, or they're not current, or they're not benefiting their company. Because everyone comes to us and they say, hey, I have a goal to 2x my business, or I have a goal to make X amount more money this year. And I think that's fantastic. Everyone should have those goals. However, they're not going to reach those goals unless they first simplify those processes, reduce the amount of over expenditures, reduce the amount of stress, reduce the unnecessary, gaslighting that's going on in their business, to then be able to hit those production steps. And we can very easily calculate through financial projection and analysis, or cash flow or budgeting analysis, to determine how they can get to those revenue goals or those profitability goals. But until we kind of weed through the simplification and the reduction of whatever's going on in their business, we're never going to hit the production phase.
Yeah. One of the businesses I'm working with right now, we're doing a roll-up inside of the HVAC industry. And that's one of the big things that they talk about. So they help them go from being mostly a service-based business to doing a lot of installs, like doing one install a day. And that's like every HVAC technician or company's like wet dream. Like, but they don't understand like the cash flow forecasting and planning that has to happen to make that transition, right? And none of them have the money stuck away and have that plan set up to actually be able to do that. So when they start transitioning and trying to do that, they all fail miserably. So yeah, I mean, that's so paramount that like you do the analysis to see where you're at right now and then what it's going to take to actually get there. Because most people just skip that step, right? Like they just, do you have the advertising, dollars set aside to actually do that? Right? Do you have the team? Did you get another truck? Did you employ that other person that you need in order to do that? Those are all huge line items that have to be accounted for.
It's kind of like putting the house before or the horse before the cart or the roof before the foundation. Yeah, and don't get me wrong, the horse or the roof, they're very important pieces, but if you don't have that foundation set, I think that's where a lot of people get into. So
awesome. Yeah, that's good advice. Good stuff. All right, so let's get into the meat, man. Let's talk about reducing taxable income, right? And that's why everybody's here. That's why everybody clicked on this thumbnail or on this episode. So like, I want to save some money in taxes. So I think like, let's not jump into like the very, very basic things, right? Let's spend our time talking about maybe 3 to 4 out of the box kind of ideas that probably most people haven't heard of so far.
So I'm going to preface this conversation, if you don't mind, Joe, with just a quick blurb, right? Because I get the question all the time from business owners, even business owners who've been in business 15, 20, 25 years, what can I write off? And we'll talk about a couple that I see a lot of business owners that miss out on. But I think just in general, a lot of business owners could write off a lot more expenses if they just had the right framework or the right mindset. The IRS defines a business deduction as an expense that has a business purpose. It is necessary for your business in an income producing activity. It is reasonable or ordinary in expenditure, and I have to have some sort of documentation for that expense. As long as whatever I'm spending money on meets those 4 criteria, I should be using it as a business deduction. And I think there are a lot of people, this is maybe the first one, I think there are a lot of people who I call them transition expenses or transitory expenses, meaning everyone has their expenses, their cars, their cell phones, their computers, their home office, where if we just look at it in the light of, does this expense have a business purpose? Is it making me money or helping me make money? Do I have some sort of receipt or documentation of proof of that expense? Then write it off. And I think a lot of people miss out on that. And some accountants are like, don't write off your home office because a home office is a red flag for the IRS. Well, crap. It maybe was 15 years ago, but it's not anymore,
Yeah.
But as far as a couple deductions, and I always try and look for deductions where money doesn't necessarily leave my financial sphere, because we get to the end of the year all the time and business owners are like, hey, what do I need to spend money on so I don't have to pay as much in taxes? And I think the question's a good question, but the framework is bad, because if you spend $1, you're really only going to be saving 30 cents in taxes. So the real question is, would that dollar be better utilized in another function? So that I might have to pay the 30 cents in taxes, but at least I have 60, 70 cents to then go reinvest or take a distribution on and invest in something else, So the 3 or 4 expenses that I think a lot of business owners are starting to key on, thanks to, whatever financial porn they're looking at on Twitter, Instagram, or TikTok, but one is an Augusta rule expense. You and I talked a little bit about before we started this, but the Augusta rule expense states that an individual can rent out their home for up to 14 days during the year, and they don't have to include that dollar amount as income on their tax return. They can exclude that from taxable income. How does this benefit a business owner? Well, a business owner can rent out their home to their business 14 days during the year for trainings, seminars, team meetings, retreats, education, whatever you're doing, as long as it's, again, documented at a market rate, and be able to deduct it from the business, but then just put the money into their own bank account. So that money never leaves my financial sphere. Okay. That's a common one that I don't see a lot of people take advantage of. There's some rules, there's some regulations, so talk to your advisor, but that's a common one. Another one that I don't see a lot of people take advantage of is paying their kids. You can pay your kids and have them do work for you in your business, and then your kids can pay for their own dance or basketball or wrestling or music class or whatever it is that they pay, or a date night or whatever. Paying your kids, run it through a payroll unless it's coming from an LLC, in which case you can pay them without having to run that through the payroll. You can pay them up to the single standard deduction, and they don't have to pay federal or state income tax on that payment, right? Again, now, granted, I have two boys. I have a 2.5-year-old and I have a 7-month-old. I would love for my 2-year-old to be able to work in the business, but that's probably not very realistic. And I've seen cases where, an examiner from the IRS has dinged a business owner because they're paying their 2-year-old. So there has to be some reasonable compensation for a reasonable amount of work being done. They have to understand how to perform a job and do it themselves. But as long as they can do that, pay them, right? Again, money that doesn't necessarily leave our financial sphere, we still, you as a parent on the flip side can still have control over what they use that money for, but at least it doesn't leave our financial sphere. Those are two ones. Another one that I actually see pretty frequently, and it's more so a blanket statement, but bonus depreciation. Bonus depreciation is a line item deduction that I don't see a lot of accountants utilize like I personally believe they should. The government has allowed us to depreciate, 100% in 2022, 80% this year, an asset that you purchased new for your business. Like we talked about, a dollar kept is another dollar earned, right? So why would you not want to try and utilize that asset in a way that's going to help you keep more money?
Yep.
I mean, we could go on and on, but those are kind of three main ones that I don't see a ton of business owners take advantage of.
Thanks for tuning in to Show Me the Nuggets. If you've been enjoying the podcast and find our content helpful, please visit our Apple Podcast page, hit the subscribe button, and leave us a review. Joe and the whole team have been working hard to bring more value to the show. Your feedback will go a long way in helping us make the show better and reach a wider audience.